We are back at Broadleaf in Parrish, Florida to cover the home buying process. I've had a couple buyers. I've been very fortunate recently to have a couple first-time home buyers, and both of them within a week requested a video where I explained the home buying process from start to finish. So in this one, that's exactly what we're going to do. We're going to go through a number of these homes in Broadleaf by Simply Dwell Homes, and we're doing that because these homes are super affordable. These homes are great for first-time home buyers. So in this video, we'll cover just that, the home buying process from start to finish for all buyers, but especially for first-time home buyers who have not been through the process yet. And we're going to use these homes as backdrops. I'm going to walk through these homes, and we're going to kind of kill two birds with one stone. We'll walk through the homes so that you can see some great homes that are perfect, again, for first-time home buyers. And as we go through them, we'll explain that process. So let's go check it out, and let's go through the process. If you have any questions, I'm going to try to give you good detail. Sometimes detail spurs on questions. So feel free. I'm going to put my phone number up on the screen right here. Reach out, give me a call, or text me if you have any questions. Thank you so much. Thanks for watching. To get things started, we will start here with the Buttonwood. And this is a 2,216 square foot house. Starting price, well, current asking price is $384,000. Let me close that without slamming it. This is a 4-bed, 3-bath, 2-car garage home. Very comfortable. So what is the very first step in the home buying process? The very first step is to assess your finances, right? And that starts with your credit score. If you finance using a conventional loan, you'll want a credit score of 620 or higher. If you are like most home buyers, you will start with an FHA mortgage, a Federal Housing Administration mortgage, FHA. FHA requires a credit score of 580 or higher. It's common that people will finance with VA. If you're a vet, if you are military, I've seen VA lenders allow for credit scores as low as a 550. And I think a lot of realtors and a lot of lenders would say that that's not possible. I've seen it before. So the first step is to assess your finances and then determine your budget. So what is your budget? You'll know your budget better than anybody else. When you finance, the lender's not going to want you to go over about 45% debt to income. Okay, your debt to income is your total monthly debts and debt obligations. That includes your mortgage, credit card, car payment, everything that reports to the credit bureau. You're going to take all those monthly debt payments and divide that by your gross monthly income. And that ratio, the lender's going to want you to stay under 45%. I'll show you the bathroom down here. This will be the first of 3 bathrooms. And then we will circle back around. This over here is the garage. And we'll go upstairs. We'll continue the video up there. All right, at the top of the stairs, the next step in assessing your finances is to save. Save for a down payment, save for closing cost. If you finance using FHA, you'll want to save about 3.5% of the purchase price of the home that you'll be purchasing. And that will be a down payment that goes along with the loan. That's what FHA requires. Okay, if you finance using a VA loan, you get 100% financing, so you don't have to put anything down. If you finance using a conventional loan, you'll need to put down about 10%. So this is the very preliminary actions that you'll need to take before you purchase a home. Make sure that you have enough money to put down. Closing costs. So when the market was really hot, buyers were paying for their own closing costs. It's very expensive to originate a loan, to pay for the appraisals, title fees, and everything that goes along with the loan origination. Right now, because the market slowed down quite a bit, it's very common. I've done it over the last couple of years with every buyer I've worked with. We're getting the seller to pay for all the buyer's closing costs. And that would be my duty and my goal for you so that you don't have to pay for that. And then next, you're going to have something called earnest money. Earnest money is the deposit that you're putting down on the purchase. So like when you rent a home, you put a deposit on the rental. When you buy a home, you put a deposit down on the purchase agreement. That is called earnest money. It's customary to pay about 1% of the purchase price towards earnest money. So you'll want to have that saved as well. And last but not least, explore, there's different down payment assistance programs. You can look into those. My big thing is those aren't commonly used, especially with new construction. So I think the very next step in the home buying process is to actually qualify, talk to a lender. A lender is going to give you answers to everything that we just talked about. And they're going to be able to tell you, here, I'll tell you downstairs. The lender is actually going to be able to tell you how much you qualify for. They'll give you a max budget amount of what you qualify for. Maybe you're not going to be comfortable paying or purchasing a home for everything that you qualify for. You probably shouldn't. You should probably have some padding and space within your budget to just live life. But that's the next real serious step in the home buying process, is to qualify for a mortgage with a lender so that they can tell you how much you qualify for and what your payment would be at different purchase price amounts. The other reason for pre-qualifying is because the lender is going to give you a lender pre-qual or pre-approval letter. You take that letter with you, and when you write an offer on a house, you provide that to the seller of the home so that they know that you are a serious buyer who is willing and capable of buying that very house. The seller's not going to want to put the house under contract, lose the ability to control the house if they want to sell it to somebody else. They can't do that if they have the house under contract with you. So they want to know that you are a very well qualified buyer. And that's what that lender pre-qual letter does. Let's go check out another house, and we'll keep covering the home buying process. After pre-qualifying, your very next steps will be to find a real estate agent. You're going to want to hire a licensed Florida real estate agent who's familiar with your needs. You're going to want to find somebody who can guide you through the market, negotiate offers, and handle paperwork. So what you're going to want is a realtor who's got real life experience. I've got 20 years experience. I've been doing this for a very, very long time. I've helped hundreds of home buyers purchase homes. Probably helped about 100 first-time home buyers. I've got a lot of experience. So the next step after pre-qualifying is find a real estate agent who's going to help you find the house that you want to purchase. Keep in mind that realtors are typically paid by the seller. So if you allowed me to help you purchase the home, there will be no fees. I will negotiate with the seller for my company to get paid. So my services, in a sense, will be free to you. And step number 4 is you're going to start searching for a home. So with your realtor, you will define the priorities of what you're searching for. Location, size, amenities, number of bedrooms, number of bathrooms, garage spaces, proximity of work, things like that. You'll put together a home search, and you'll likely use the platforms of like Zillow and Realtor.com. What I like to use is the MLS home search. I'll set you up on an email home search. You tell me what you're searching for in a home, and I will put all that criteria into a home search, and I'll email you every single day all of the homes on the market that match what you are searching for. Parrish is a boom town. There is tons and tons of new neighborhoods going up. So in Parrish, it's very common that home buyers are searching out new construction homes. So what I would do is I'd help you find that perfect builder in the perfect neighborhood who offers exactly what you're searching for in a home to help you find a new construction house. So we'll go for a new or a resale home. The buying process is a little bit different between the two different types of homes, new or used, and we'll cover that in this video as well. Step number 5, make an offer. So after you find the house that you want to purchase, you'll make an offer on it. Okay, so the way we're going to do this and the way we value a home is we will run comps on the home. A comp is a comparable system where we compare the home that you're purchasing to other homes that have sold just like it recently. So another way that I'll value homes is I look at days on market. How motivated is the seller to sell the home? If the house has been sitting for 180, 365 days, those are your days on market, then we know that they probably want to sell it pretty bad, and they may be willing to take a low ball offer. That doesn't always hold true. Sometimes they can't afford to sell it for a lower price, and that's why it's been sitting on the market for a long time. But we're always going to check all the criteria on the house and try to get the motivation of the seller so we know how much of a discount we can get the house for you. When it comes to new construction homes, we'll do the same thing with the comps and days on market. But another thing that I like to do is I look for glut of inventory. So if you've got one builder, and let's say they've got 3, 4, 5 homes for sale of the exact same floor plan that have been sitting on the market for a long time, that's when we'll make an offer on the house and see if we can't get you a deal. Right now the market's kind of slowed down a bit, so it's happening. We're getting some pretty good deals for most of my buyers. Along with that offer, my duty as a realtor to you would be to protect you. So you're going to put in earnest money. I spoke about earnest money earlier. That's your deposit on the purchase agreement. If you just walk if you just walk away from the deal, that earnest money is put in there so that the seller can keep it. It makes them whole. So if you terminate the deal and you walk away, that earnest money is there to protect the seller, so that they can keep the earnest money if you walk away. What we'll do is put different contingencies in the purchase agreement, in the contract, to protect you so that you can get your earnest money back. So what we'll do is we'll put in an inspection contingency. If the home doesn't inspect, if there's something wrong with it and you don't want to purchase the home anymore, we'll kill the contract and get your earnest money back based on the inspection. We'll also have a financing contingency. If your financing falls through, we will kill the contract and get your earnest money back. And the last one that is very common, it's on all contracts. If you've got a loan, if you're purchasing the home using financing, then we'll have an appraisal contingency. And if the home doesn't appraise for the agreed upon purchase price, then we will kill the contract and get your earnest money back. We will move on to step number 6. That is conduct inspections and appraisals. You guys, this is where we do our diligence. We make sure that everything about the purchase is up to speed and everything is very good, from the condition of the home to the value and also to the homeowners association. So one more contingency that I didn't mention just a second ago is the HOA. So you'll have a chance to review all of the bylaws, all of the conditions of the homeowners association. If you don't like the HOA and the way it's set up, then you can kill the contract and get your earnest money back. So at this point, we'll do the inspection. We'll hire a professional home inspector to inspect the house. They're going to check for roof conditions, for the HVAC. We're going to look for mold. We're going to make sure that everything in the house is still functional and works. If you don't like the condition of the house, if you don't like it, we'll kill the contract. We'll terminate the contract and get your earnest money back so that you can move along and look at the next house. Your typical home inspection is going to cost about $300 to about $500. It just comes down to the depth of the inspection. I do want to point out, if you go new construction homes have really good warranties. Some home buyers opt out of doing a home inspection just based on the fact that they have a warranty. I don't advise that, but it's a very common thing. So you will commonly have new and resale homes inspected. Also, during the due diligence portion of the contract, we will have the lender order the appraisal. Again, the house has to appraise at the loan amount, otherwise the lender's not going to give you money to purchase the home. The lender's not going to give you more money than the house is worth to finance it. So that's why we go through and have an appraisal contingency on the house as well. Moving along to step number 7, which is securing your insurances. So we're going to insure property insurance for the house and title insurance. So first of all, property insurance is pretty self-explanatory. If you buy a newer home in Parrish, property insurance is actually very, very inexpensive. Your newer homes in Parrish, homes that are less than 10 years old, and for an average size home, you'll very, very likely be paying under $2,000 a year for property insurance. So I know it's a truth, property insurance is very expensive in Florida, but that's on older homes and that's on homes in high risk areas that are highly affected by hurricanes. But in Parrish, where I specialize and I serve people, property insurance is very inexpensive. We're 40 to 50 feet above sea level. Most of the homes are built out of the flood zones. The flood zones that most homes are built in Parrish are flood zone X, which is the lowest probability flood zone in all of Florida. So if you do need flood insurance, we will also shop for that at this point in time. But expect your flood insurance to come in much lower than what you expect. And title insurance, what is title insurance? So when you purchase a home, what you've got is a chain of ownership or chain on title of ownership of all the people and or businesses who have owned that property before you. So what you had was maybe a rancher who owned the land. The rancher sold it to a developer. The developer developed the land, and then the developer sold the land to the builder. Builder built a house, and now you're buying the property with a house on it. So what title insurance does is it insures your purchase against any outside interests from laying claim to the property after you purchase it. So what you could have is maybe the rancher wasn't paid enough money for the land, and the rancher jumps in after you purchase the home and says, hey, that's my land, I wasn't paid for it. They can't lay claim to the property. Well, they can, but your title insurance is going to insure you against loss so that nobody can lay claim to the property after you purchase it. Give me a call if that wasn't clear, a text, and I'll clarify. I know that was kind of confusing, but that's what title insurance does, and that's what we do during step 7 of the home buying process. Step number 8 is finalize your mortgage. So after the appraisal and after all inspections, the lender is going to button everything up and finalize it. There always seems to be one mysterious doc that has to be submitted right before closing. You'll have to write a letter of explanation or provide one more doc. It never fails. But they're going to finalize everything. And then what they do is they take all the numbers from the entire purchase, from the purchase price to the cost of the appraisal to all the escrow numbers and everything. They're going to itemize every single penny, every penny. And they're going to put that on a document called a closing disclosure, and they'll send that off to you for review. The lender's going to review it with you, and you will see where every single penny is spent on the purchase. That'll be the very last thing you do before we move on to step 9, which is closing. Step number 9, the final step before you actually purchase and own the house, the final step before you can move into it and take possession of it. That step is close on the house. So your closing typically happens 30 to 45 days after the offer is accepted. That's for resale homes. If you purchase a new construction home, if the home's complete, it's already built, it's a spec home, that holds true. You'll close about 30 to 45 days from the time that you put the house under contract. If you're having a house be built, then that could take much longer. If it takes the home 6 months to be built, then you may not close on the house for 6 months. But on your typical home, it's going to be 30 to 45 days from the time that you put it under contract. In Florida, Florida uses title companies to close the purchases. So I brought up title insurance. Title is insuring your purchase. Title wants to make sure everything's perfect because title has so much to lose if there's a mistake. So title's going to host the closing. You'll go to closing. You'll sign about 45 minutes, maybe an hour and a half worth of documents. You'll sign documents from promissory notes to deed of trust, closing disclosures. You'll sign settlement statements. This is where you're going to bring your cashier's check or arrange for a wire for your closing cost and for your down payment. If you're paying cash buyers wire the entire purchase to the title company. This is the point in time where you sign off on everything. Once everything's signed, once the deal's funded, then money is exchanged. The seller gets the money for the purchase, and the buyer gets the keys. They get the remote to the house, to the garage door remote. This is the point in time where you take possession of the home. Congratulations, you are now a homeowner. That's it. That's the entire process. It's actually pretty simple. My recommendation is just don't overthink it. Talk to a lender, talk to a realtor. They'll answer all your questions. They'll set everything straight. Before you know it, you'll be a homeowner. You guys, as always, thank you humbly. Thank you for watching, liking, and subscribing. It means the world to me. If you have any questions, please see my contact information down below in the description. I'd love to hear from you. I love helping buyers. Thank you.